Hello everyone, a very good morning, good afternoon and good evening to all of you. This is your host Vaibhav. In today's session of Daily Stock, we are going to look at the quarterly earnings of the Walmart. It released its earnings earlier in the day, and we will see how its actual quarterly reports for the second quarter of 2024 showing up the business operations of the company and where it stands for the upcoming quarter. We will consider its past revenues as well as future guidance to see what kind of opportunities we can bet on and what is the best way forward. Here in India, it's raining heavily, so you might even be hearing some background noise of in-season trains. Now, coming to the press release from the company itself, we will be looking at the earnings presentation. This is the second quarter FY24 earning release from the Walmart. The company has posted strong revenue growth with revenue growth topping 6 percentage points. But the main thing which I think is what the market is paying attention to its forward guidance, because if we look at its earnings for this quarter, these are as good as it could have been. It is better than the expected, and even after that, we have seen that the share price is seeing some profit booking on these higher levels, and there is a decline close to 3 percentage points at the moment, more than 2 percentage points from the yesterday's closing level. So even after this strong release from the company for the past quarter, maybe it is the forward guidance of the third quarter of financial year 2024, which is weighing on the company's current share price, which is a bit softer than expected. Before we come to the forward guidance, first consider the statement, and for that we will have to look at its profit and loss statement to see its revenues and the performance of the company. These are the key metrics for financial year 2024. Let us look at the quarterly earnings first. Alright, here is the condensed consolidated statement of income. Now, if we consider the net sales are up for the second quarter of 2023, which is quite solid with this growth of 6.7 percentage point. The membership and other income is lower if we compare it to the same quarter of 2022 by 4 percentage point. The operating profit is also up. The operating income is up by 6.7%. And if we look at the net income is up by 56.5%. Now, what these income statement is telling us that for this quarter, the growth has been quite phenomenal, but maybe that is now already factored in the share price, because if you look at the share price of the company in the current quarter, it is already up significantly. So that is the main reason why we are Looking at correction in the share price after the release of companies' earnings and with lower forward guidance, not exactly lower, but there is expected moderation in the sales growth, and that is one key factor which is seemingly dampening the mood of the investors. Now, here, if we look at the forward guidance of the company for the third quarter, it is expecting the net sales to increase 3.0%, whereas the operating income is likely to increase 1 percentage point only, with expected EPS to be around US dollar 1.45 to 1.50, and that is going to be lower than the EPS of this quarter. The company is expecting some moderation of total revenues in the third quarter of this financial year, and this is the whole year guidance of the company. The revenues are significantly up. The gross profit margin is up 50 basis points. The operating income is also up by 6.7%, whereas for the full financial year, they is adjusted, this is reported, and there is also the EPS. EPS is up 55.3%, which is quite strong. Now, if we look at the highlights of the quarter, the revenue is up significantly with operating expenses rising tad slower in comparison to the growth in operating income, and that is the main reason for better margins which we are seeing in this quarter. The e-commerce sales are also up with 24 percentage point pickup. Now, let us go to the highlights of the company's earnings report. This is year quarterly performance for last few quarters, with the operating income now reaching the relatively high of per share US dollar 7.3, which is also higher in comparison to what was observed for the second quarter of financial year 2023. Let us look at the operating profit rate, the margin. The company is enjoying robust margin of 24%, and the key highlight here is that its operating margin has improved, but in the forward guidance, the Walmart has also stated that it is expecting some moderation in the operating profits in the ongoing quarter, that is the third quarter of 2024. So we will have to watch out for the results of this quarter as well. These are the revenue figures for each quarter, and if we compare to the second quarter of 2023, it is up by 6.7%, and in terms of quarterly numbers, this has been quite a strong quarter in comparison to the first quarter of this year. This is the forward guidance provided by the Walmart. Free cash flow has risen from 0.2 US dollar in the first quarter to quite solid figure of US dollar 9 per share. The international sales are up for the company, and these are now contributing US dollar 27 billion out of its total sales of $161 billion. So the share of international sales are up. Its subsidiaries are contributing strongly with growth, double-digit growth in Walmart, China, and Flipkart. Canadian Canadian operations have grown 5.1%, whereas sales in China have grown 21%. That is quite strong. Now that we have considered the financial reporting from the company with strong numbers for the second quarter, but slight moderation expected in the third quarter, we will have to look at the technicals in light of the fundamentals which we have already considered. Now, if we look at the share price of the company in run-up to the earnings report, the share price of the Walmart in past month has climbed up from 155 USD per share to top at 162.74 USD per share. Now those gains are evaporating and it is sliding towards the levels which were prevalent in the same date of July. The correction is happening, and in today's session the correction has been relatively sharp. Now let us first consider the daily time frame charting of the company, and this is the biggest red bar which we are seeing in recent charting of last couple of months. If we look at the performance of the shares price of the company in whole year, after correcting from 160 to 117 in a very short span of time, we have seen strong rebound in the company's share with a rally from trough to peak of around 30 percentage points, more than 30 percentage points. But now it is seeing some correction from these higher levels, and it will be interesting to see if the company will be company share price, if it is able to hold close to this immediate swing low of 152.84, I think we can expect a rebound of Ford and the ongoing rally to continue with same strength as we have observed for last couple of months. But if the shares drop below this immediate swing low, then I think you will have to take a cautious approach and also press for the share price moving sideways in coming months. So the immediate price to watch out for in the Walmart chart is going to be the immediate swing low and how the company's share price reacts to it, because for next couple of sessions, if the Walmart share price doesn't really drop below the immediate window, then that will be a sign of the possibility of a strong reversal from these levels back toward the immediate swing high. But if the share price drops below the immediate swing low, then that will indicate the break of the upward channel formation with higher highs and higher lows being made for last couple of months. So the immediate concern is going to be around the immediate swing low and how the price reacts to it. In today's session, the outlook is negative. If you are an intraday trader or a short-term trader, then the outlook has turned negative. It is better for us to keep looking for short selling opportunities instead of trying to buy at the current juncture, because even after the strong result, we didn't really see the share price of the Walmart sustaining on the current level, and it is seeing some correction. So that is the indication of the apprehension in the market participants regarding the current valuation of the Walmart. And if we see some crucial levels are broken, then we can even expect a deeper correction towards US dollar 150 or below that. That possibility is there for the Walmart share, and as a result of that, I would advise to take a cautious approach, see how the price reacts for next couple of hours and also next couple of sessions. And as I say, for short term, it is better to take a sale or rallies approach and keep looking for opportunities to go short. But if for next couple of days we see consolidation closer to the current levels and no growth below immediate swing, in that scenario, we can indeed take our chances for resumption of the rally which we have observed for last couple of months. But given the expected moderation in the revenues for the third quarter of this financial year, I think we now have reached the stage where some correction is likely in the Walmart shares, and we can expect the current drop, that is today's sharp drop on the lower side, to continue in next couple of sessions as well. From short-term perspective, it is of course better to go for buy sale on rallies approach, but if things stabilize and we see consolidation for a week or two, then we can indeed take our chances for buying as well. So from short term, the call is to look for short sale opportunities, but from the long term, it is still strong. It is in a bullish phase, and we have to wait for the signs to emerge of a reversal in the current trajectory of the share price of the Walmart. So that is my take looking at the fundamentals as well as the technical side of the Walmart, we saw its quarterly earnings with strong growth, but not so strong expected earnings for the third quarter. And then on the technical side, we have seen this phenomenal rally, and now a possibility is emerging that it might be breaking the upward channel of high rise and high lows. And if that happens, we can expect the correction to deepen in light of this development. For us, it is going to be a better deal to sit on the sidelines if you are a long-term trader, and if you are a short-term trader, then you can keep looking for opportunities to go short after due correction. That is, you can adopt sell on rallies approach. Thank you all for joining in. Have a fabulous day ahead. We will be back tomorrow with a new interesting stock to consider, its earnings and the forward guidance. We will see if there are emerging opportunities for us to exploit. Thank you all for joining in. See you next time around. Till then, goodbye.